Did you buy all those reports about the shipments being weaker than estimated?
I didn't, and it sounds bad, but you need to put it into some context. Is every year going into a cycle, Apple will give, now if we rewind 6 months, they'll give these reports to their suppliers to build a boatload of phones. And so, and then every year as the cycle starts, typically in the month of December, we'll hear about a contraction of orders. The reason why Apple does this, think about a coach that's telling a runner to run a 3-minute mile, basically. They're telling their suppliers, you need to hit the ground running with this, when in reality, Apple only wants them to run a 4-minute mile. And so they always pare this back. This is normal operating procedure. One other just quick point. If you take the numbers for face value, for the production in the March quarter, that would imply about 50% of the phones in the next year will be the iPhone 10. That's the $1,000 plus phone. And investors are expecting that number to be 25 to 30%. So this is, I think, expected, number one, and number two, I think it's actually a positive.
So that's the first quarter of 2018. Take us back to the fourth quarter of 2017 for a minute. They brought the 8 and the 10 out at the same time, talked about them. The 8 sales initially were somewhat disappointing. We were told that's because everyone's waiting for a 10. They're going to make it up with the 10. Do we have any indication whether they in fact made it up in the fourth quarter with the 10?
We have a little bit of an indication by looking at the supply. And we talked to some of the builders, the suppliers, and they've been struggling to keep up. And if you look at the inventory in the U.S., we check this every day. We look at about 140 stores in the U.S. every day, and they're just reaching now full supply. They're at 97% as of yesterday. My point is this, is that if there wasn't a lot of demand for this phone, for the iPhone 10, you'd have more supply. And so I think that this is, the numbers are going to be reported in the next 3 weeks, and I think that they will do better than expected in terms of the iPhone 10.
You mentioned the mile, the 3-minute mile. It's really a 4-minute mile, that analogy. And then you said that was a positive thing. So why positive?
Well, the positive is that as part of this report yesterday, is that they're on track, or they're telling their suppliers to build 30 million iPhone 10s in the March quarter. And if you normalize that for the year, it basically implies that about half of the phones are this higher price iPhone 10. And if I was going to just boil the whole Apple story down over the next 2 quarters into one thought, it's this idea that ASPs, the average selling price of the iPhone, is going to be going up, and I think that's going to be the key factor investors are going to focus on.
So talk about the ASP specifically, because there are reports, could be right, could be wrong, that in fact there's some resistance on the price, because as you say, it is over $1,000. Do we know whether in fact customers are getting a little price sensitive when it comes to Apple?
Well, we can look back at what the supply is, and the supply remains really tight, which is an indication that demand is good. I think the simple takeaway is this, is that the ASPs are going to go up meaningfully. We think they'll be up greater than 15% this year. And it's important to note is that the vast majority of people who buy iPhones, greater than 80% globally, buy it on a monthly basis. And so you're talking about going from $40 to $48 a month, and that $8 difference is reasonable for most people.